Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. I'm pleased that we have Jack Crooks with us today. Jack's going to be talking about the fate of the euro, profiting from the crisis. Jack is the president of Black Swan Capital, and for those of you that have been with us in previous webinars, you know that Jack's view has been right. What he has been predicting is basically what has played out over the last 6, 7, 8 months, and of course there might be a lot more to come, and maybe there won't be. I mean, who knows? Jack's going to be talking about the different scenarios that he sees, whether you trade currency futures, options, spot. Highly recommend that you sign up for his Currency Currents newsletter. He will deliver it to you every morning, and he also has some paid services. So again, really pleased that we have Jack with us. Jack is really an expert in the foreign currency markets. Please remember that today's presentation is really just some education. We're not including taxes, margin, and commission. You might want to go to optionseducation.org to learn more about options, and any examples that are used should not be construed as investment advice. And also, obviously, if you're trading commodity futures or Forex, these can be dangerous also. You need to think about risk and reward, and you should read that entire disclaimer that Jack has right there on the slide, please. It's very, very important that you should consider risk-reward. You might have an opinion. You might think you're going to be right, but again, there are many plausible scenarios that might play out. Think about the alternative situation scenario and why it might hurt you. A little bit about ICFX options. Excuse me. You need to have an equity options account. So with any kind of broker, let's say you can trade an equity option, you can trade these currency options. They're cash settled in U.S. dollars with European-style exercise. You can use spreads. The symbols are all right there. So we have dollar-based currency FX contracts. We also have dollar quote currency contracts, so Aussie, pound, euro, and the New Zealand dollar. For those of you that are used to the spot market, you might look at AUM, GDP, the British pound, EUU, and NDO. The Canadian dollar is CDD. So those are some of the more popular ones, but you can always go to fxoptions.com to learn more about all the symbols, how they're built, the brokers that you might be able to contact to open an account, and so on. Jack, I want to turn it over to you, and I'm really looking forward to your presentation on the fate of the euro, profiting from the crisis. Thanks again for joining us.
Thanks, Steve. Appreciate it. Thank you, everybody, for being here. I appreciate it. Just going to go through today some of the key concepts and try not to glaze you over with all the numbers of debt, GDP and those types of things that we've seen before, and you can get other places. I want to talk really about the concepts here. As Steve said, we were fortunate enough to get this right on the euro. We actually started talking about this a couple of years ago. I did a big presentation in Vancouver with about 900 people in the room. One of these big shows, and the title of the piece at the time was "Could the Euro Soon Be History?" And it was really kind of funny because as I started the slide presentation, I heard several chuckles in the audience as I put it up. And you may remember the time the dollar was, of course, supposed to go to zero, and the euro was supposed to rule the world and those types of things. But we had always seen this euro as really kind of an artificial construct. And I'll talk about that briefly and get into really what I think the key concerns are here going forward and why we think the euro is in trouble here on either scenario that we see that's plausible going forward. But as I said, it did play out, fortunately. Sometimes we may have been a little early on the trade, but we did finally catch this trade, and we've done pretty well on it and are happy with it and are staying with it long term. And as Steve said, it doesn't mean we won't see backing and filling at times. In fact, right in here, maybe the the euro is due for a little bounce. It's hard to say, but we think the longer-term trend is still down, and that's really kind of what I'm going to talk about today is the fundamentals are in place to continue what we refer to as the euro spiral of death, which we created this chart. And it really does rest on these three key scenarios, starting at the left up top there. And let me grab the little pencil here. We have the default risk premium rising. And this just refers to the rising relative yields of all those fiscal basket case countries that are in trouble. Their yields are rising relative to the German Bunds, the 10-year German Bund, which is kind of the key benchmark quality bond in the eurozone. And we're starting to see the spreads blow out in a way that we haven't seen them in a long time, and I'll get to that. We still don't think all the risk is priced into these currency or into these bonds, and I'll explain why. The incentives are fading in the monetary union for the key player, which is Germany. Germany had a lot of reasons to give up its D-mark. It's very hard-won quality D-mark. It gave up for the euro at the time. A lot of people were still surprised, and I think people now are surprised in retrospect, but at the time people were surprised that the Germans gave up their D-mark for the euro. Many in Germany at the time didn't like the idea and still don't like the idea and have been proven right on that. But the reality is Germany is really the key here, and their incentives, and I'll get to that, for staying with this whole monetary union are fading very, very quickly. In the long grind of austerity, which kind of goes to the point that it seems to be the only scenario that is in play in an effort to try and keep this whole game alive, is this idea of austerity, meaning everybody cuts back that's in trouble, reduces their budget deficits. We think a lot of this looks good on paper and looks good on theory, but we're seeing the crash of really just the social unrest, and these austerity measures have just started. So I guess our point here there with the long grind of austerity is, which goes to our scenario, that even if this thing does work, this austerity is going to create an intense amount of pressure on the eurozone countries in general in terms of growth, and in those terms, we think the euro continues to spiral down. So those are really the three key, I guess, as we identify them, macro themes as to why we think the euro continues lower from here. Just to refresh or review why we never thought that the eurozone the euro was going to be a real global competitor against the U.S. dollar. Even during the bear market in the U.S. dollar, we never believed the hype because the euro really never faced the type of global conflagration that it faced during the credit crunch. It never really had a real test. And we continue to go back to these key themes that, really represent what you need as kind of the core requirements for a common currency to be successful. Historically, very few common currencies have stood the test of time. None of them have really. Some have lasted longer than others. But some have been built in, been built up in the raw material that creates the sustainability for a common currency. We don't think the euro had any sustainability when you look at the key requirements. The key requirements, number one, are really common culture and common political unity. That doesn't exist in Europe. Again, when everybody's making money, they can paper over these problems, but as soon as we have a hit, as we've had, it's everybody, is kind of, jumping ship for themselves type of scenario, and we're seeing that. There's still a lot of tensions, and there always have been across the various cultures within Europe. No need to go into them. I think you understand that. So there's not a common culture, and we've never really had political unity there. That was one of the goals to try and create this, but it was kind of backwards. They needed to create political unity first in order for the currency to work, and they haven't. And in fact, the euro now is creating more disunity on the political side of the fence as we see the old hatreds kind of coming to the fore of late.
Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.